Okay, hello everyone. Thank you everyone for joining on time and welcome to Japan Youth Investment Competition Orientation. To introduce myself, we'd like to introduce myself. So my name is Kai Kobayashi. I'm the organizer and lead host of Japan Youth Investment Competition and the CEO of Nexa AI. I'm really excited here and looking forward to supporting you all throughout the competition.
Hello, everyone. My name is Ren Otani, and I'm the founder and CEO of Nexa I'm also the co-founder of TGFL, which are both the companies that are hosting this competition. My work focuses on education, finance, technology, and leadership through national programs like this. So I'm very excited to host the Japan Youth Investment Competition, and I hope our first term of this competition is a success with you guys, and I look forward to leading you. Thank you.
Before we begin, I'd like to share that this cycle of JYIC, we set a maximum capacity of 500 participants. However, received application from over 1,500 students. This makes JYIC one of the most selective and largest investment competition in East Asia. Congratulations to everyone here on being accepted. So welcome. Thank you all again for joining and welcome to Japan Youth Investment Competition Orientation. In this session, I'm going to walk you through what JYC is about, how the competition works, the rules you need to follow, and what you can expect over the next 12 weeks. The goal today is to make sure everyone here clearly understands the structure before we officially start the investment period on February 9, 2026. If anything is unclear at any point, feel free to note your question and we'll have a Q&A session at the end. So, Japan Youth Investment Competition. Welcome. Japan Youth Investment Competition is an educational investment competition for high school students. This is not about gambling on stocks or trying to get rich quickly. It's about learning. Through JYC, you'll get the chance to experience what it feels like to manage a portfolio, make decisions as a team, and see the results of those decisions over time. We designed this competition so that you can practice real-world investing in a safe, simulated environment. Our hope is that by the end, you'll not only understand more about finance and markets, but also gain confidence in your ability to think critically and make long-term decisions. More specifically, JYIC has few main goals. First, we want to help you build real financial literacy. That means understanding basic concepts like risk, returns, diversification, and how to analyze a company. Second, we want you to learn how to research and justify your decisions. It's not enough to say, we like this stock. We want you to be able to explain why. Third, this is a chance to work in a team setting. You'll have to discuss ideas, disagree sometimes, and reach a decision together. Finally, you'll hear from professionals and professors in finance and economics, which will give you a realistic view of the industry and possible future path. How the competition works. Now, let me give you a big picture of how the competition works. You'll be using Investopedia Simulator to manage a virtual portfolio. The competition runs for around 12 weeks, and during this time, you'll make trades, track your performance, and think about how to manage risks. Your responsibility are not only trading. Every week, you'll submit a short reflection form. There will also be a midterm checkpoint in the middle of the competition, and at the end, you'll submit a final report that summarizes your strategy and what you have learned. From those reports and overall performance, we will select the finalists who will then present their strategy live in the online final event. For the team structure, each team is made up of 3 to 5 students, and within your team, you must have one team leader. The team leader has few important roles. They manage the Investopedia account, receive official emails, submit the weekly Google form, and submit final report. In other words, all formal communication between your team organizer goes through the team leader. However, that does not mean the team leader decides everything alone. All investment decisions should be made as a team. The leader is just the person who executes the trade and on the platform and handles the administrative tasks. For the trading account, I want to be very clear about the trading account rules. Each team is allowed only one Investopedia account for the competition. The account should be created and managed by the team leader. Name on that account should match your team name or be as close as possible. And you're not allowed to create multiple accounts to test different strategy or restart your performance. You also cannot switch to a new account in the middle of the competition. If we find evidence of multiple accounts or switching accounts, it may lead to penalties or disqualification. Now, this is the competition timeline. The entry deadline has officially ended, and the investment period will officially begin on February 9, tomorrow. From that date, your trades in the simulator will count for the competition. On around week 6, we'll have a midterm checkpoint. On April 30, all teams will submit their final reports, and on May 3, we'll announce the finalists. On May 10, we'll hold a final online presentation and awards. You can find this information on the competition page on the Global Finance Library website. For the weekly structure, during the investment period, your week will roughly follow this pattern. You will discuss markets and ideas within your team, decide what trades to make, and have your team execute those trades on the Investopedia account. At the end of each week, you must submit one Google form per team. This weekly reflection is mandatory and is a part of evaluation. Right. Okay, Ren, can you go from now?
Sorry, so I'll take the floor from here. So let me explain a bit about the weekly report. The weekly report Google form is submitted by the team leader, but it should be reflecting the whole team's efforts and thinking. The form will ask to list the main assets you bought, from gold or even stocks, and mostly stocks in this competition, and the assets that you were able to sell that week. Explain briefly why you made those decisions, and share any important lessons or observations that you were able to have. This can be concise and just be done on Google Forms, like I said. We use these reports to check that you're actively participating, and it will be one of the criterias that will put you into some award criterias. Um, so this shouldn't be just random thinking. It should really be about your strategy and not just a random trade history. They also help us understand your process, which is important when we evaluate the teams later. Missing weekly reports repeatedly can affect your evaluation quite heavily. So for the midterm evaluation, which is on the next slide, in the middle of the competition, around week 6, we will conduct a evaluation, and the midterm checkpoint is not a separate competition, but is a structured a moment to review your engagement and approach so far. We will look at your weekly reports, your portfolio activity, and your general consistency, uh, and midterm results may be used as a part of our final evaluation. In some cases, we may also share general feedback or guidance with teams based on what we see at that point. The idea is to encourage you to stay disciplined and reflective through the entire competition, not just at the end. Next slide, in the final report, pitch deck. Um, at the end of the investing period, every team must submit a final report or pitch deck by April 30th. In the report, you will explain your overall strategy, your key points, how you manage risks, how your portfolio performed, and what you learned from the experience. You should also reflect on what went well and what you did differently, what you would do differently in the next round. We will provide more detailed guidelines for closer to the deadline, but you should keep your mind from the beginning since it is all about your strategies. Um, as you trade and discuss as a team, think about how you will later explain your decisions in a clear, structured way. Next slide, in the finalists and the final event section, after reviewing the final reports and overall performance with our judges, we will select the top teams as finalists. On May 3rd, 2026, we will announce which teams have advanced to the final round, and these finalist team will be invited to present their strategies online to the panel of judges on May 10th. On May in final presentations, you will summarize your approach, walk through your key decisions and reasoning, and answer questions from the judges and myself. This will be a chance to showcase not just your results, but your understanding and communication skills throughout the conference, from the conference. So during the financial workshops, the next slide, as an important part of the JWIC, is a series of financial workshops we will be holding throughout the competition itself. These sessions will be guest speakers, including former senior analysts from Goldman Sachs, JP Morgan, and Nomura Securities. We'll also have people that were the ex-board of directors from the Bank of Japan and elite professors from universities such as Keio and Penn State University. The workshop will usually last 30 minutes to 45 minutes of the teaching, followed by 10 minutes of Q&A. We'll start with the most basic topics and gradually move on to advanced ideas of investing so that you can build your knowledge step by step. We strongly encourage you to attend these session lives if possible because you will have a chance to ask questions directly. And we'll be moving on from the next session that all the workshops will be mandatory for at least the leader. In the next slide, education nature of the program. I want to emphasize that JWIC is an educational platform. The workshop and the competition are designed to help you learn. They do not provide personal financial advice to you, but they're not recommending specific real-world investments. All trades you make within the virtual simulator using the virtual money, nothing in the competition should be treated as advice for actual investing in your own or your family's accounts. Please keep this mindset that you are here to learn, experiment, and reflect in a safe environment with real market movements. Academic integrity and AI use, of course. Now, a very important point is, you know, the use of AI tools. We expect all work you submit, your weekly forms, your final report, and your financial presentation to reflect your own team's thinking, understanding. You may use AI tools, and we understand that people here are from all over the world. So you may use AI tools to help you brainstorm, structure ideas, and translate some words. And but you must understand and be able to explain everything you submit. You may not copy and paste entire answers from AI, of course, or other sources and present them as your own analysis. Uh, you may not fabricate trades, performance data, or any part of a report. We'll be checking all your history on Investopedia Simulator as an admin, so we don't have to worry about that too much. If we find clear evidence of plagiarism, fake data, or misuse of AI, this may result in serious penalties, most likely disqualification. So in the code of conduct, along with integrity, we also have expectations for your behavior. Um, we ask that you treat our participants, guests, and speakers and organization with respect at all times, even in chats, online sessions, or in communication related to the competition. Please follow our instructions that we provide, meet deadlines, and represent your school or your team in the professional way. If a team repetitively behaves in a disruptive, respectful way, or repeatedly ignores instructions, organizing committee reserves the right to remove the team from the competition. That being said, feel free to ask us questions, reach out through our email. You don't have to be super formal on it. I think we've been getting back to you within a couple hours, so we'll continue to do that with you. So communication official updates. So your team leader is a main contact between your team and organizers. We will send official emails to team leaders, and they are responsible for sharing the information with all team members. In addition, all participants are required to follow our official Instagram account. Many updates and reminders and workshop announcements will be posted there. And some information may not be repeated by email. Some little information um, like that. So make sure to be caught up. Our official Instagram is on the screen, JWIC_TGFL. So make sure to follow that. Um, and check regularly with your team leader, of course, that your team does not miss any important information as well. Support and questions. If we run into any technical or competition related issue, the correct process is for the team leader to contact us through the email. So we've been having scam emails being sent out to you guys under our name from, some email accounts. I think we addressed that on our Instagram. Um, so please only trust our emails, which are shown on the screen, jwyc.tgflofficial@gmail.com or the global finance libraries at gmail.com. Before sending a question, please check the orientation packet and previous emails because in many cases the answer may already be there. But if something's unclear or something is not working, don't hesitate to contact us. We'll be back at you in hours. Next step for all teams. First, make sure your team members and team leaders are clearly confirmed. Second, the team leader should complete the Investopedia account setup exactly as described in the orientation packet. Only the leaders should create the account and join the team, like I said. Third, every team member should follow JWIC TGFO on Instagram. Finally, be ready for the official start on trading on February 9th, which is tomorrow, and for the weekly Google form. All the times we'll be talking to you in will be in Japan Standard Time, so please be careful and watch out for that as well. Uh, if you stay organized from the beginning, the rest of the competition will be much smoother, I believe. So let's be prepared like that. That covers the main structures and rules and expectations for JWIC. Now we'll move on to our Q&A section. If you have any questions or how the competition works, I recommend typing in the chat just for efficiency, and I'll answer one by one until about 12 o'clock. And from 12 o'clock, we'll be moving on to our guest speaker session. Thank you for attention so far, and I'll open the chats for question answering. First question answer asked was how many teams will be selected for the final round? It will depend. It will depend on the judges' opinions at that time, but it will not be hundreds and hundreds of attendees. Will you be sharing this presentation with us? Oh yes, we'll be sharing the recording of our session, just for the people that joined. We'll also be posting our presentation on YouTube, so if you want to get back at that, please do so. We'll share everything with you guys. Don't worry about that. Will the meeting be recorded, be shared to all participants? Yes, it will. It will also be posted on YouTube. If we don't have our Instagram, if you don't have an Instagram account, I encourage at least one of your team leader at least make an account and follow us. If that's not totally possible, I believe you can be called with emails. Um, Next, can we depend on our team leader for Instagram? Yes, you can depend on your team leader for Instagram. How many days a week will the training be conducted? Every day. Every day, every day the market is open. What if you're too young to use Instagram? Yes. Maybe ask your parents for Insta. Yeah. Thank you for answering some of the questions. How are the teams judged or scored? We'll have two main criterias. One criteria will be pretty clear. It will be successes on your gains from trading, and the other criteria will be your strategy. Your strategy document shared with us. We'll also choose rankings there. We'll have official judges look through that as well. On what basis will the finalists be chosen, including the negative marking? And what basis we'll be rating you throughout the whole competition and share you the results at the end. Are all meetings at the same time at 11:30 Japan time? Most likely, but if there's any small adjustments, we'll send it out to you. Yeah. Will the meetings be held on weekdays? Most likely Sundays for Sundays Japan time. What are the rewards of the finalists? We're still considering it, but most likely money. Money will be the rewards. Um, Good morning. I placed the school email in the sign up because the personal email does not work. So I did not get any information. My teammate had to inform me. Um, Shoot us an email to our official email, and then we'll add you to our email list. If you're too young to use our if you're too young to use our Instagram account, don't worry. Um, yeah, don't worry, and have one of your teammates follow us, or you can still be caught up. If you're a complete beginner to investing, do not worry. Our competition is actually catered to, all experiences. So maybe take this as a good chance to start and learn. What does it mean by until the market is open? So the US market opens on Eastern time, so it will be open, and in the 12-week span, we'll have our game continue. Are all meetings at the same time? Yep. Um, will the market be open on all days? Yes, It'll be open accordingly to how the actual market works. It's not the movements aren't fabricated or fake or anything. It's actually quite literally how the actual market moves. Um, how many workshops will be held per week? Um, it depends. We'll be sending out an email. We actually have a second workshop next Sunday, so please be sure to attend that. Um, how many weeks is there? Is it only the US market? Yes, we'll primarily be working with the US market. Um, a lot of similar questions being asked here. So, please, yeah, please read back in the chat. Is the Investopedia account in direct correlation to the actual market? Yes, it is in direct correlation to the actual market. It's not a sandbox or simulation style. Thank you for asking. If your teammate didn't come to the meeting, we'll share the meeting with you guys or the leaders, and you can share with them, or we'll post this on YouTube. Like I said, I'll share our YouTube channel um, tonight with you guys. That being said, think that I think I was able to answer most of the questions. Um, a lot of the questions being asked are in the orientation packet, so be sure to check that later. There's a meeting. There will be meetings throughout the whole competition. We'll let you know beforehand. There will be a second workshop next Sunday. Make sure to join that. Um, so I think we are a little slowing down the questions. So yeah, we'll be closing the Q&A session here. I adjourn the a Q&A section here. And if you have any questions from now on, feel free to, like I said, feel free to DM one of us on Instagram or send us an email on the official email account. And yes, I think we'll give out $100,000 to for the competition itself to invest. At this point of time, we'll be moving on to our first session of the workshop of the Japan Youth Investment Competition. It is my pleasure to introduce today's guest speaker, Dr. Jiro Yoshida. He's a professor. Professor Yoshida is a leading scholar in real estate economics, financial economics, and macroeconomics. He currently serves at the Pasqualia Chair and Professor of Business at Penn State University, and he is also affiliated with the University of Tokyo, Stanford University, and Columbia Business School. His research focuses on how markets form expectations, measure risks, and price real assets. And his work is widely published and recognized internationally. In short, he studies how finance work not just in theory but in the real world. I'm truly honored to have someone of his expertise share insights today. Professor Yoshida, thank you for joining us, and the floor is yours.
Great. Thank you very much for the kind introduction. Do you hear me okay?
Yes, we hear you
Yeah.
okay.
Right. So, yes, I'm a professor of business at Penn State and a professor of economics at the University of Tokyo. But I'm currently speaking from California, and it's about 7 p.m. here because I'm visiting Stanford for a few months now. And so it's much better than speaking from Pennsylvania because it will be like a 10 p.m. there. So I'm really glad to be able to talk to you today as the first speaker. I'm really excited, and it's really amazing that so many high school students are interested in investment and finance in general. When I was a high school student, I had no idea about the economy or about investment, of course. So it's really, really amazing for me to see many students, high school students, are interested in finance. It's a really interesting field, and I enjoy doing research in finance and real estate and macroeconomics. So it's a really, really fun and amazingly difficult field to study. Okay. Um, so if you when you graduate from high school and getting to universities, um, you can have many more opportunities to get involved in investment learning. For example, at the Penn State, students run a actual fund rather than just a simulation. But the undergraduate students have an organization and to run a fund and invest actual money to stocks and bonds. So those opportunities are available for you in the future. So that's going to be really, really rewarding and interesting. Okay, so today I'm going to spend about 30 minutes and to talk about two things. So one about the general investment, investment in general, and two about news. So let me share my screen. All right, I hope you see the screen. Okay. So the first part is the introduction to investment. So this is an investment simulation competition. So let's think about investment in general. Okay. All right. So investment. What is investment? Investment is to spend something for future benefits. And something can be money, of course, for this is like a stock investment simulation. So for stock investment, you invest money, right? But the something to spend doesn't have to be money. You can spend time, you can spend effort, and so on. And but anyway, the investment's key idea is to have a time dimension. You spend something now, and you receive something in the future. So if you put your money in a bank account, then you can have a bank deposit, right? That's kind of investment. If you put your money, or probably you don't put your money in pension fund, but your parents are probably putting their money in pension funds, then those pension contributions are, of course, part of the investment as well, because they spend money now and then they're going to receive benefits after retirement. Home purchase, when someone, maybe your parents may have purchased a house, then when someone purchases a house, then it's a huge immediate investment or spending, right? Then what's the benefit for the future? In the future, the owner doesn't have to pay rents. So the reduction of expenditures is benefits for the future. So it's a trade-off between the current home purchase price versus reduced rent payment in the future. Then stock investment, of course, this is kind of investment. Then what I like to emphasize here is that receiving education. Education is also really, really important investment. So, so education or learning, you don't have to put your money or you don't really put your money in necessarily, but you put a lot of time in your learning. You put a lot of effort in your learning for future benefits. Okay, so those are all kinds of investment. And indeed, if you talk to finance professionals, usually people's focus is on financial assets like stocks and bonds and so on. So then tend to ignore those education as an investment and so on. But as a researcher or professor, typically we think the education is the biggest investment for people. And so this is really, really important. And if you live in Japan, you may have heard a government slogan like from saving to investment. Okay, I don't know whether you know that or not, but that government slogan is a kind of a nonsense to me because savings in a bank account is already a part of investment. So from saving to investment means sort of nothing. But that slogan is meaningful for a stock trading companies and a securities company. So that's more like sales pitch but so the investment is really broad. So my point here is that investment is really, really broad. And what's the contrasting concept to investment? Contrasting concept to investment is consumption. Okay, consumption is the spending for immediate joy, immediate happiness. Okay, so when you are hungry, you go to McDonald's and have some sandwiches, then that's consumption, right? Then the difference between consumption and investment is whether to have time dimension or not. So if your benefit is immediate, instantaneous, then that's consumption. If your benefits are coming in the future, then that's investment. Then you may wonder, okay, some of the consumption may be combined with investment, right? And that's true. Usually, you cannot really divide clearly consumption from investment. Because, for example, imagine you go to like a karaoke box with friends and you pay money and that's a spending for consumption. You get the immediate joy. But at the same time, your singing becomes better, right? So that's a investment into your skill, indeed. And then in the future, you may become famous as a singer, then that's a great investment. Or if you go to traveling, and if you travel with someone, then you spend money and you enjoy the trip right now. That's immediate joy. That's a spending, consumption. But at the same time, you learn a lot about the area or country. For example, if I go to Thailand, then I'm going to learn a lot about Thailand. Then that kind of learning is going to form my future thinking, and that's a huge, huge educational investment to me. So usually consumption is also combined with investment. So that's it's really difficult to divide clearly, but conceptually we can divide investment from consumption. Then you are interested in investment right now. Okay. Then when investment is involved, then there's always associated assets. Okay. Associated assets are we call it capitalized. Okay. Assets are capitalized future benefits. So if you think of, let's say, stock investment, then you put money in stock, and then the stock investor is going to receive future benefits every period. Then it's going to continue forever. Then you can summarize the total future benefits um, especially by discounting future money back to present, then that present value of future benefit is called a capitalized asset value, and it's a stock value as well. So similarly, you can do the same for savings. You can do the same for pension asset. You can do the same for real estate. You can do the same for human capital. So those are concepts of assets. Then some of the assets are traded in public open marketplace, or some of the assets are traded between people in a closed situation. So, for example, if you think of a bank deposit, you have a contract, bilateral contract with the bank. It's not really in the open market. When you invest in a pension fund, it's a bilateral contract. If you buy a house, it's a bilateral contract with a previous owner. And if you receive education, that's a contract with educators. But stock investment is a little bit different because stocks are traded in open capital market, stock market. You don't really know who you are trading with. But you put money in the stock market and somehow that order is processed and you get the ownership of stock and you can buy or sell stocks in the stock market. So you are using US market right now for your simulation. So it can be New York Stock Exchange or Nasdaq. And so those are places so many people get together in these markets and buy and sell stocks, but you don't necessarily know who you are trading with. So those are called, those public is a part is called a public capital market. Then the opposing or contrasting concept is a private market or private over-the-counter market. If you compare these two markets, probably over-the-counter market is much, much bigger. So my point here on this slide as a kind of introduction to investment is the you are currently focusing on stock investment. But please recognize that the stock investment is only a kind of investment, only a sort of small portion, small section of large investment opportunities. Again, human capital is the largest asset in the economy. Real estate is probably second biggest asset in the economy. Then stock, bonds, and other things follow. So, as a young high school student, please have a perspective that investment is a really, really general idea about spending something now and getting benefits in the future and investable or investment object of investment is really, really wide and huge. All right, so that's my introduction, and let me stop here for now, and then I can take a question if you guys have any. I don't know whether people can speak up by themselves, or maybe moderator can ask questions for them, or if there's no question, I can move on.
Okay, at this point you can raise your hand. Click on React and click raise hand, and then you can turn off, and when I call on you, you can turn off your mic and ask a question. Seems like we don't have any questions. Oh, there is one actually. Um, yep. H Honor, hey too. You can speak up. You can turn off your mic and speak up. Turn on your mic.
Hi.
Hey, I can
Hi,
hear you.
So I would like to ask, do you think buying house now is reliable?
reliable?
Yes.
Okay. So good idea or not? It really depends. I don't know whether you are living, whether you are living in Tokyo or somewhere else, but it's hard, very difficult question to answer. Um, you know, so again, what I can say probably is that buying a house gives you benefit of reducing future rental payment. You don't have to pay rents in the future. Then the trade-off is that you may get capital gain for your house or capital loss for your house. I tend to think that real estate doesn't necessarily appreciate in the future. So sometimes in some market conditions, real estate housing prices can appreciate, but depreciation of real assets are huge, especially in Japan. Structure like building, house structure depreciates due to aging and functional obsolescence. That's huge. So if you are really interested in capital gain for investment, I would think a stock investment would be better than real estate, but that's my personal opinion. It really depends on the market condition, location, and so on and so on. So I cannot really say anything for sure. But great question. Thank you.
Thank you very much.
Risk it right. Could you unmute your mic and ask your question?
Hello, am I audible?
Yes.
Uh, in the current era or the current year, what do you sir think is the best way of growing your capital or growing your assets?
So is your question, which market is the best market to put your money in for future
Yes,
growth?
yes.
Okay, and that's also a great question, and which is and also very difficult question. So there's always a trade. Okay, indeed, that's a really great, good question. So let me move on to the next slide, and when I talk about that, so let me defer to answer to your question. I have a really good slide for you next in the next one. So maybe I can take another question before moving on.
One more question, I think then.
Yeah.
Um, the
Or because,
second,
or maybe I can take two. If I have two more questions, I can take both of them.
oh, okay. Seems like there's three people raising their hand, but the first one was Ua Wata Kutaku, Rena Hong.
Yes, hello.
Yes.
Hello.
All right. Good morning. So my question was, I was wondering at what age did you start investing, if I may know?
Ah, pretty late. As I said, I had no idea about economy or investment or finance when I was a high school student. I had no intention to invest anything, even when I was a college student. So I was pretty late in doing investment. Is it good or bad? Probably I should have invested much, much earlier. But also, again, that's a really good question. So to me, so if you recognize investment broadly, it's about the how to spend time, okay? Not just the money, because usually young people don't have much money, but everyone has the same amount of time. So it's really about how to put the time in something, right? And then what's going to be the best place to put your time in? I would think it's about education. Then this stock investment competition is a really great educational platform. So it's part of education to me, but I would encourage you to put your time in learning. There are so many things that we don't understand in the world, from universe to cells or biology to finance to economy to everything. So spend your time in learning a lot and thinking a lot. Okay, not just asking AI a quick answer, but think hard about by yourself, spending time for that. That's going to reward you a lot. And studies have shown that the greatest return is about the return to human capital or from education. So that's my advice to you.
Thank you.
Mhm.
Let's have one more question by the Wall Street professionals. Last
Great.
one.
Hi. I actually have two questions for you. First of all, by when do you think that the gold prices will stabilize? And if you believe it's a better investment, if it's better to invest in silver or in gold right now?
Oh, so I didn't get the first part, but which market is stabilized?
Gold prices.
Gold. Yeah, yeah, yeah. So again, no one knows. But so if you know, probably you know a recent news about gold price plummeting and the silver price plummeting. But one way to think about that is it's no one knows for sure again, but it can be considered as a correction, small correction indeed. So if you look at the longer time horizon, and then gold prices have been increasing for decades. I mean, there are so many different phases. So there were decades when gold prices were stagnant and even decreased. But overall, if you take a look at like a 50 years, 60 years, 70 years, gold prices have appreciated. And then even looking at the past year, gold price appreciated so much. And then recently, the gold price plummeted a lot, a little bit, a lot for investor, but plummeted a little bit from the perspective of long-term investors. So, and then no one knows whether gold prices are stabilized or no. Because, gold demand is always very mysterious. Why do we need gold? No one knows, right? So silver is a little bit more straightforward because there are so many industrial uses for silver. But gold, why do we like to have gold? Is it because it's beautiful, it's shiny, or is it really stable metal? We don't know for sure. So it really depends on how you view, and then it's related to my next section of the talk, but how marginal investors see those goals. Depending on the views, changing the views of marginal investors, gold prices can continue appreciating or plummet or stabilize. And because I'm not really the marginal investor, I cannot really say for sure, but that's my answer. Great question.
Thank you.
Thank you. All right, probably I can move on, and then I can probably finish my talk. It will not take the entire 40 minutes, so I can take question later for anything you have, even unrelated to my talk. Okay, so let me move on to the next slide. So this is a really interesting graph taken from a very recent working paper from a researchers. Now, the graph shows have two dimensions. Y-axis is the expected return. X-axis is the measure of risk, and the colors represent different asset classes. So this is far beyond stock market. Okay, so again, if you look at the really broad asset classes, you have a very wide range of returns and risks. Okay, so and the beta on the x-axis is the measure of risk. And then you see blue dots on the left. Those are typically bonds, right? Blue dots, you look at the blue dots, US TIPS, US bonds, US government bonds, US muni bonds, US investment grade corporate bonds, US high yield corporate bonds, global bonds, excluding US, and so on. Those are blue dots and located on the left part of the graph, so that's relatively safe. And then you see a kind of upward sloping line here. So that shows the trade-off between return and risk. So you probably have heard high risk, high return. That means low risk, low return. So those bonds are also called fixed income securities. Typically, those fixed income securities have a lower risk, and so expected excess returns are also low. Now, the next section have purple. Purple is a hedge fund. Again, hedge funds are like some organizations that invest in broad assets on capital markets. And so hedge funds have many different kinds of strategies. Some hedge funds focus on fixed income only. Some hedge funds are focused on derivative securities, some focus on commodities. So hedge funds are diverse, but roughly speaking, hedge funds lie in the middle. Then you see yellow ones like REITs and private real estate. Those are real estate, slightly to the right, but right in the middle. REITs are publicly traded real estate companies or real estate investment trusts. So in your simulation, you could also invest in REITs probably. And then light yellow is a private real estate, and that's not traded in the stock market, but more bilateral over-the-counter investment opportunities to invest in buildings. Okay, so those are real estate in the middle. Then you see red section. Red ones are stocks. Okay, U.S. equity large cap, U.S. equity small cap, global equity developed countries excluding U.S., global equity for emerging markets. So those are located to the right part of the graph. And going back to one of the questions, so you see a kind of global universe of investable assets here. For example, if you look at the global equity emerging, you see these like orangish pink triangle roughly to the right, top right section. So those are really high risk, high return stocks. Okay. So you have so many different kinds of assets in the world. And so this is a really nice graph to remind you of the wide spectrum of investable assets. So if you are interested in long-term growth, and then if you don't really care about the short-term volatility, then those high return, high expected return assets are probably good. Okay, because you don't have to worry about short-term loss. Then you can hold onto the portfolio. Then after 20 years or 30 years, you may be able to achieve these high expected return, right? But for your simulation, you are constrained to 3 month investment. So like, you are like a short-term investor. So you cannot really take a long-term investor strategy here. So high risk asset can give you a huge appreciation, but within 3 months that can plummet and it may not recover in the future. So this expected return does not really tell you the performance within 3 months. That's something you have to remember. But again, this is a really good universal view about the investable assets. Okay, so let me move on to a kind of main theme for today. To me, this was just an introduction, but I'm spending already many minutes, so I'm going to be quick. So news. Okay, when you think about stock investment, then you probably do your research in forming your strategy, which company is good, which sector is good, which country is good, and so on. Then something very, very interesting happens in stock markets usually. So this is a recent news for Microsoft in January 28th. On January 28th, Microsoft reported its earnings. Okay, reported its second quarter earnings. Then on Wednesday, the earnings report was very good. It beat Wall Street estimates on the top and the bottom line. What's the top line? Top line is revenue. Bottom line is earnings after extracting or after removing expenditures. So both revenue and earnings are great for Microsoft. That's a fact, right? However, the company's stock fell more than 7% on the news. You see the graph on the bottom. Even though the report was super good, but the stock price plummeted. Okay. So that's interesting, right? And then afterwards, some people speculated why. Okay, so according to this article, but it's come down from those highs as investors continue to raise concerns about the AI industry's massive spending. This is just a guess. Usually those guesses from the media, in the media, or some expert analyst or expert commentators are wrong. So don't believe too much about the in those comments or interpretation of stock prices. Okay, you should think by yourself. That's much better than relying on someone's opinion because those people who commented on stock prices didn't know exactly what happened indeed. And if they knew, and then, if you look at this comment, it's kind of nonsense, right? Because everyone knew that AI industry's massive spending before earnings report, right? So earnings report has nothing to do with this AI industry's massive spending. So this interpretation is not really sensible. Okay, so think by yourself about how to interpret the facts you see in the market. That's your learning. That's something very interesting. That's where you can make a difference in your investment strategy in the future. Okay. So, when you think about the stock price, let's think about how it's determined. Okay, so the diagram here shows a business by a company. So let's think of a McDonald's as a company. Okay, then customers are us, so we have hamburgers or sandwiches there. So we make payments to McDonald's by having goods and services. We have sandwiches and we have smiles for free from McDonald's, so we pay for them. All right, so company have a revenue or top line, and then in order to produce sandwiches, they have to hire people. So they have labor. So the McDonald's combine labor, capital, and technology to produce sandwiches. Okay, so the McDonald's have to spend money from revenue to labor in the form of wages, and they pay for technology. And then also they don't raise cow, they don't raise chicken, they don't grow wheat. So they have suppliers, so they have to make payments to suppliers. So money goes to supplier as well. And then the company also has to pay taxes to the government. So after paying those money to those stakeholders, then also you have to recall capital. Because McDonald's have shops and trucks and kitchen equipment and so on. So who provides those capital and how McDonald's pay for these? So that's where capitalists or investors come in. Okay, so capital, buildings, trucks, inherently they are long-lived, right? Long-lived means that time dimension kicks in. When time dimension kicks in, that's investment, right? So when McDonald's spends money for these buildings, then the benefits come in the future. Those are the investment. So in order to invest in this capital, the McDonald's may not have enough money at the beginning, so they have to get money from someone else. So someone can be banks, someone can be bondholders, someone can be stock investors. There, those investors on the right related to McDonald's. They invest money and get return in the form of interest, in the form of dividends. And for the equity part, equity is another name for stock. And then, so equity is divided into small pieces. That's called common stocks. And that's where we are investing in. Then total amount of equity is also called a market cap or market capitalization. And that's the present value of the future dividends, right? Then that total stock value is divided by the number of shares. That is called stock price. Okay, so stock price is price for equity per divided by number of shares. And if I have one share of McDonald's, I'm entitled to receive that money. Okay, that's the stock price. And then, as you now understand, stock price is the sum of present value of dividend next time, present value of dividend per share in 2 periods, present value of dividend per share in 3 periods, and that continues forever. Okay, so when dividends per share increases, that's the good news for stock price, right? Then dividend per share increases when earnings are higher, right? So typically, Microsoft's good news or about earnings is a good news for stock price as well. But we saw a decline in stock price. So why did the stock price drop even though earnings exceeded estimates? Okay, the media said the Microsoft earning report beat all Wall Street estimates, right? So to understand that, you can think of this type of graph. This is the time series graph of dividend stream for the future. So zero here is now, and on to the right you go to the into the future. Somehow people have expectation about the future dividend growth, right? So right now dividend is here, but in the future dividends are going to grow somehow like that. So that's previously expected dividend growth implied from stock price. So stock price is determined right now based on this expected future growth in dividends. Now, when news comes in, the news can be here in a cross mark here. So this earnings, okay, dollar earnings is still really good, much, much better than the current earning, and it's a super good earnings report. But maybe this earnings can be slightly lower than previously expected dividend level. Then what's going to happen is that the investors may revise their future path about the growth in dividends. So now revised dividend growth path can be lower. Okay, then the present value of the all future dividend income can be revised downward. Then so that can lead to stock price drop. Okay, so again, the point here is that even though company's performance is super good, still stock price can move in the opposite direction. That makes stock investment super difficult and interesting. Okay, so as you see, um, every time people have some sort of expectations for the future, and every time when something happens to earnings report, something happened to war, something happened to election, and so on and so on. So there are always so many different kinds of news, and that news is evaluated against the previous expectation. So good news is not necessarily good news for stock investors if the good news is not good enough, right? So that's how you have to see the news. So when you do your analysis about companies and industries, you of course you should do okay. This industry is really good. This company is really good. Okay, earnings is really lucrative, but that's not the end of the story. You have to go step one more further, step further to evaluate whether that your new assessment of the company performance is better than people expect in the stock market. If your view is stronger than the stock market investors, then you should buy. Because your view is that the stock price is going to be revised upward in the future. We don't know for sure when. It can occur after the competition ends, like after in 5 months you may prove that your thesis is true, but it's another part of a difficult part of a stock investment, especially you have a time horizon like 3 months. But anyway, that's the nature of the news. All right. Then whose expectations? Definitely not Wall Street analysts, because again, as you saw for Microsoft earnings beat all Wall Street analysts' expectations. Still, it created the stock price drop. Okay, so then whose expectation? What's important is the marginal investor in the market. Marginal investor is the the most kind of standard investor in the stock market. So if you think of stock market order flow, okay, There are people who are trying to who are trying to buy. Okay, so they put orders, and then the order prices can be drawn like this, and it's called the asking price curve. And then we have also selling price curve as well. And this is called, oh, sorry. Is it opposite? But anyway, so my point is the marginal investors is here. So when a trade occurs, when asking price equals the bid price, and then a trade occurs. Okay, so that most recent traders are marginal investors, and their view really determines the stock price. So stock price investment is the game to make a guess about these marginal investors' view of the stock price of the earnings in the future. Okay, that's the nature of the game. Right. Then the last slide I would show you is that expectations tend to be wrong. So don't rely on professionals. You feel free to make your own guess, make your own view about future paths and prospects. So this graph shows how professional forecasters have miserable performance. Oxford Economics, Claudia, someone, St. Louis Fed, CEPR, Bloomberg, UBS, those survey results suggest this is about inflation forecast. Okay, so most consensus forecast about inflation is wrong, always wrong. Okay, so stock investment can teach you how the economy works, but remain skeptical about news commentaries. Okay, so you will learn how professional analysts say something so sophisticated yet wrong. So feel free to think about your own thesis and scenario. You may be better than those professionals, right? So enjoy your investment simulation for 3 months. All right, that's it for my presentation. So I can take any question as time allows.
Again, participants, thank you. Firstly, thank you, Mr. Dr. Yoshida, for your presentation, and sharing your expertise with us. It seems like we can take questions at this time. If you have any questions, raise your hand. I just saw Pinnacle, Vien Lim Wei In. Feel free to unmute yourself.
Thank you for the opportunity to let me ask my question. So, I would like to ask, sir, for your opinion on Forex exchange. Do you think it would be good for me to invest in this 3 months period?
Yes, good, very good question. My answer is don't trust my advice. But and then foreign exchange is a really, really interesting field. So researchers have figured out foreign exchange rates are unpredictable. Using any theory, all possible theories, exchange rates are not predictable. Okay. And even, you can learn a lot of interesting theories. Like one keyword can be CIP, covered interest parity. You can do some research by yourself, and then that is the idea to create a hedging portfolio related to foreign exchange rate, and then there should be no arbitrage for this portfolio construction with a hedge position, but still exchange rate violates those CIP rate. So that means indeed no one knows no one knows about the foreign exchange rate, right? That's a really good question.
Thank you. Next, Ugur. Um,
Hello.
Hi.
yeah.
Good morning. First of all, I want to ask you because you said that at like this age in high school, for example, the main thing you should be investing on is education, and I also agree you should be investing on like yourself and your health and education. What age do you think is the best age to actually start investing in stocks?
Right, right. So probably, it's not really 0-1 situation. You should start whenever you have extra money, you should start investing in stock. The point is that you can learn a lot from stock investment. So stock investment is not just about accumulating wealth, but it's about learning. Once you have stocks in your portfolio, you are interested in that company or industry. Naturally, you follow news about that company, and that's going to create a huge difference in your way to see the economy. That's my advice. So yeah, whenever you have, after doing some, part-time job at the McDonald's, and then you have extra money, then you may want to put your money in portfolio. I mean, there are many ways to put money in a small amount. So, and especially ETF, there are so many ETFs available right now with a small fees. So those are really interesting. You can explore different ETFs and different stocks, individual stocks, and then see what's going to happen. As long as you are putting extra money, you're not going to go bankrupt. So you feel free or feel safe to invest your extra money to learn something new.
Thank you.
Welcome.
Next, Professor Yoshida, how is there a amount of questions that we should take today? There seems like there's a
I
lot.
have some time, so I can take questions. What's the original plan? We have like a 15 more minutes originally. Is that
Uh,
right?
yeah, sure. We didn't really have a end time originally, but we
Right?
can maybe do until a little before 1 o'clock. Is that okay with you?
Yeah, no problem, no
For us,
problem.
okay. Um, the Wall Street professionals, her Vikrant Sinha, can you
Yeah.
answer? Yep.
Thank you so much for this presentation, Professor, first of all. And I wanted to ask you, how much of the stock market do you believe is emotional?
Emotional. Okay. Yeah, that's a really good question. And that's a really hot, I mean, always a hot research topic. Every day we have a new research paper to decompose price change into rational part and emotional part and so on. So that's still ongoing research, meaning that no one knows. My answer is always disappointing for you guys, but there's no clear answer to anything. So, and then it's a really important way of thinking. So if I knew something really for sure, then I would have used that knowledge to earn money so that I would have been a billionaire or trillionaire, right? Then the fact that I'm not that rich means that I don't know. And in the world, no one knows, right? So no one really uses that type of insight and get money, or they don't really win always, right? So the answer is that no one knows. Okay, so again, the reason why saying I'm providing this kind of vague answer instead of giving you a really solid answer is that I don't want you guys to think that knowledge set in investment and finance is really solid and fixed. It's evolving every day, and we really need a new mind and a new way of thinking. And we really need people to deny existing theories. So, again, my overall message for you guys is to think free and try to deny professional advice. Okay, so that is going to lead new idea. And again, the idea, actual investment advice is don't put everything in capital market, right? It's going to lead to bankruptcy. So invest your extra money, okay, surplus money in investment. Then you keep your necessity part in your bank account. Then you can play with the surplus money and you can try and experiment your new thesis, and that can lead to a really, really interesting new idea.
Thank you very much.
Yeah.
Thank you. Thank you for your answer. Indo Investments, Jaya, Indo Investama Jaya Sky Ku. Would you like to ask your question?
Is marginal investors basically retail investors, individuals like ourselves? What do what do they base their expectations on? Is it the analysts or what else?
Right, right. So that's a really good question. So, indeed, we don't really know for sure who is really the marginal investor. Marginal investor can be institutional investors like a pension fund. Pension funds rely on professional consultants. So if you believe that the marginal investor is the pension funds, then you can collect information about the investment advisory service forecast information. Then that's really the basis for pension funds' view about the market. Indeed, if you remember the graph of asset classes of return and the risk, that graph is taken from pension funds' expected return. And their expected returns are really formed by professional consultants' views and analysis. So, yeah, that's a really interesting strategy. Okay, that's one. But if you think that a marginal investor is a retail investor, then retail investors typically don't do analysis, right? So they have some gut feeling and some, in a sense, they do, they use their neural network, right? They use their neural network and process the information in a nonlinear system in their brain. So we cannot really replicate those retail investors' perception and judgment and investment strategy, but perhaps those can be sometimes, and then retail investors are diverse. There are some really good, well-performing retail investors and losing retail investors as well. As a whole, generally speaking, retail investors tend to lose money compared to professional investors. So probably some sort of sophisticated analysis might make sense, right? So if you always rely on your gut feeling, that might not lead to a good performance. But again, that's I'm open to any different ideas here. But a good question.
Thank you very much.
Thank you.
Next individual, Bull Capital's Co-Hirdan Goyal.
Yeah. My question is, what do you think about mutual funds as an investment for school students?
Yeah, yeah. So are you talking about a real investment or simulation?
Simulation and also real.
Okay. So I think for simulation, you are constrained to stocks and options in Investopedia simulator, if I'm right. I'm not, I may be wrong. But for that purpose, you may want to focus on individual stocks and options and so on. For actual investment, mutual fund is a really always a good starting point. But for mutual funds, you have to you have to check fees. Okay. management fees. In many cases, mutual funds fees are really expensive, and after fees, it's really difficult to make money from mutual funds. So if you compare mutual funds with the ETFs, typically you can, for example, if you are interested in broad, diversified portfolio, you have usually choices: mutual fund for broad index and ETF for broad index. Then usually ETF fees are much, much smaller, a tenth of a mutual fund fees maybe. Then if the portfolio is pretty similar between these mutual fund and ETFs, then ETF investment is good. So, you know, for the actual investment, so my point here is for actual investment, nominal return is not everything, but cost, trading cost is also really important. Okay. So for mutual fund, even though you are not really moving money, you have to pay fees for mutual funds. If you do actual stock trading, then you have to pay trading fees for each transaction. If you do day trading, if you do like 100 trades every day, then you are going to pay too much fees for your stock trading. So after all, your performance is a net of those fees. So you have to really think about the after fee returns. Okay, that's my advice here.
Thank you very much. Next individual will be Bluebird Kayla Ruslan.
Thank you. You mentioned that market expectations and company commentary can be inaccurate. For example, when analysts can be biased or when company commentary can be optimistic. What indicators do investors rely on most when making a decision?
Right, right. That's a good question. So one thing I can say is that analysts' forecasts tend to be around the mean. Okay, I didn't have time to talk about that, but if you imagine each analyst's position, they don't want to deviate from the herd. If one analyst deviates from the herd and then that forecast is wrong, that analyst is going to be fired. So in order to avoid that job security, in order to keep the job security, all analysts tend to be similar to other analysts as well. So they tend to herd, they tend to produce a very similar forecast with some range. That's one thing I can say. And then, so that's one reason why analyst forecast can be wrong. So actual outcome can be much, much higher or lower compared to the average type expectations. That's one thing I can say. And then, also there's a big fixed effects. I mean, effects means a person tend to be hawkish or, you know, so so for that matter, you can keep track of the past analyst report and check the tendency of each analyst, whether the analyst is tend to be optimistic or pessimistic. Okay, so usually each analyst tend to have some tendency about views. So that can be a good information for you guys to check.
Thank you very much. Unfortunately, there are a lot of questions left, but I think that wraps our promised time for the day. Professor Jiro Yoshida, thank you for sharing your expertise and your precious time with us today. It's a truly honor for our students to learn directly from a scholar from your caliber. We deeply appreciate your insights and support for our program. And thank you again for joining us. 本日はありがとうございました。
Thank you very much for having me and good luck.
Thank you very much. At this moment in time, I will adjourn this meeting. Thank you, participants, and thank you, Dr. Jiro Yoshida.
Bye.
Have a great day.